Is the U.S. stock market facing a market top at the end of a historic bull market? Eran Peleg, Chief Investment Officer at investment management firm Clarity Capital, joins us in the studio to help us explore the topic further. Mr. Peleg, thanks for joining us.
Pleasure to be here.
So what can you tell me on the topic? Is the U.S. actually nearing the end of a historic bull market at this point or not? We saw the bull market essentially start in 2009, and of course there's rumors of interest rates going up. What's happening?
So we're definitely at an advanced stage in the equity bull market. Already the bull market in terms of its length is longer than average. And, markets have moved up considerably. The U.S., depending on the market index that you're looking at, might be up around 200% or so since the 2009 low. And we are seeing some signs of, let's call it danger signs out there. For example, we are seeing increasing investor optimism, and mainly driven by the fact that actually interest rates will remain low at zero for the foreseeable future. We are seeing more volatility in markets. We are seeing what we call parabolic price movements in certain assets. Recently, the DAX in Europe, China indices have moved up significantly in a very short period of time. Having said all that, we don't see that in terms of the major kind of indicators that we follow, we don't think that they're flashing dark red as of yet.
Okay. I mean, isn't it just a simple equation of, interest rates go down, equities go up, and vice versa? I mean, what market signals are you looking for here beyond the ones that you just mentioned? Is there something specific that you can tell is going to boost up the market?
So there's a few things. I mean, first of all, economic growth. Economic growth remains reasonable. Growth is not falling off a cliff. Global growth is moderate. It's not strong, but it is reasonable. Usually, ahead of a bear market, you get the economy start moving into some kind of slowdown or recession.
Yeah.
Second of all, valuations, equity valuations. Although market indices, many of them are kind of at all-time highs already. When you look at equity valuations, so equity prices relative to profits, relative to book value or sales, they're not overly expensive yet. They're not cheap either, but they're not overly expensive. Systematic risks, sometimes we get, a shock to the system driven by some shock to the financial system. Following the severe financial crisis of 2008, we've seen significant government intervention in the banking system, which has really reduced those risks considerably. And at the moment, we don't see anything significant there. And besides that, one thing which is very important, monetary conditions. Monetary conditions, because the 2008 crisis was so severe and because the recovery thereafter was relatively weak, we're still in a non-inflationary environment, and that means that central banks don't really need yet to tighten monetary conditions. And while that is the case, it's difficult to see something that will trigger equity markets into a bear market very soon. And there's many things that we can mention here. Global central banks are still easing monetary policy. You mentioned the Fed, the U.S. Fed, but look around the world. Since the beginning of 2015, over 20 central banks have cut interest rates. They're still reducing, interest rates. Even the U.S. Fed, which was already expected to perhaps, increase interest rates, maybe even in the first half of this year, has become more dovish recently, and those interest rate expectations have been pushed back further towards the end of 2015. Maybe it won't even happen this year, I might even say. And one indicator of the U.S. monetary policy stance that we often look at is the slope of the yield curve, which is the difference between long-term and short-term rates. Usually before a recession and before an equity bear market, we usually see that difference go flat. I see a flat yield curve, the difference between long and short-term rates very low. At the moment, we're very far from that still.
Eran Peleg, it will be very, very interesting to see how things play out in terms of the Federal Reserve and, of course, globally, how monetary policy will impact the market. Thank you very much for joining us.
Thank you.